Not so fabulous day, but at least it's warming up and it's melting. But thanks so much, and we're really glad to be able to have Brian Lynch from the Department of Revenue here to explain the circuit breaker income tax credit program, which our income tax preparation program is in full swing, and our tax preparers talk with people about the possibility of being eligible for the credit. But it's just very good to get that information out to the rest of the public. So Charlie, thank you very much for taping this to share with others. And Charlie also will share it with some of the audience in Groveland. But very appreciative of Senator Tarr's office for facilitating all of this and your regional tour.
Yes.
Thank you very much.
And I do have coffee. I've got decaf on in the kitchen too that I can bring out, and water and cookies.
Thank you.
Okay, so perfect. I'll slide over and we'll.
Okay, thanks.
Okay. Thank you, Colleen, for hosting today, and thank you to Senator Tarr's office for inviting me to come out. And thanks for you folks for coming out as well. So today we're going to talk about the Senior Circuit Breaker Tax Credit. Kind of a funny name. People say circuit breaker. What's that all about? I didn't develop the concept, but the person that did used the analogy that when an electrical outlet is burdened or overwhelmed, that the circuit breaker is tripped or activated to provide some relief for the burned outlet. So they use that with real estate tax, kind of a stretch if you ask me. I wish we could just call it the Senior Real Estate Tax Credit. People would know what we're talking about, right? But the credit is in place through the Commonwealth of Mass. For seniors, you need to be 65 or older is the first criteria. If you file jointly with your spouse, as long as one spouse is 65 by December 31st, then if the numbers work, you're still in the running. So it's really designed, generally people 65 or older are generally on a fixed income, yet we might realize that our real estate tax seems to go up every year. So sometimes it gets to be a little bit difficult for folks on a fixed income, but with a rising real estate tax. So this credit is in place to try to offset and to try to help that out, okay? So there are a few income limitations that we need to talk about. So for 2018, if we just look at my handout in the right-hand column, if you're single, your total income cannot exceed $58,000 for 2018. If you're married filing jointly with your spouse, your total income cannot exceed $88,000. Some folks file as head of household because they have a dependent person living with them, where they're providing more than 50% of their financial support. And that qualifying income would have to be less than $73,000 for 2018. The other thing we need to think about is the assessed value of our home in Massachusetts, our principal residence. It would have to be less than $778,000 for 2018. So the legislature allocates the funds for this credit every year. And you can see that it's on my handout that we've got not only the current year 2018, but we also have the prior 3 years as well. This credit has been in place for over 10 years. The state is generous to a point, but it's true of a federal credit or a federal refund. Same with the Commonwealth of Mass. If you're able to go back the prior 3 years, but that's as far back as they'll go. So if someone were to be eligible maybe to claim for 2015, they would need to address that in a couple of months, by April 15th. It's always the due date of the return plus 3 years. So if you know anybody that might be eligible for 15, they need to take care of that in a couple of months. The best thing I could probably tell you today is here in the Senior Center, you have volunteers that are affiliated with AARP. They use equipment that's provided by the IRS. They work together. If Mary Ann prepares the return, we work together as a team. I'll check her work, or vice versa. If I prepare the return, she checks my work before we send it to make sure it's accurate. They're very competent people. They're well-trained. They really know what they're doing. So that's probably the best thing I could tell you related to this. And they still have appointments, which is great. Colleen mentioned that they still have appointments available, because some of the other senior centers we've gone to, they're kind of filled up. Unfortunately, there's never enough volunteers, right? And anything that's good and free fills up quickly. So sometimes people kind of miss the boat a little bit on that. So let's talk about, I should mention also that the maximum credit for 2018 is $1,100 this year. So pretty generous, pretty significant. Not that everyone's going to get $1,100, because everyone has different income and everybody has different real estate tax. And it's a combination of the two. So the calculation is really straightforward. You would just bundle up all of your income, and what I mean total, really gross income. You'd have to include your Social Security, your bank interest, dividends, capital gains, public pension, regular pension, basically everything. Sometimes there's a little confusion around that total income issue because the state doesn't tax Social Security, but when we're trying to determine if someone needs some help or assistance with their real estate tax, we really want a picture of their true income, their total income for the year, okay? So what I'd like you to do is just kind of ballpark maybe your total income for the year and take 10% of that amount. And that's half the equation right there. The other half is to take the real estate tax that you paid in town, and you're able to add half of your water and sewer. Do you have sewer here or septic? Septic, okay, all right.
Yeah, we don't have it either.
No, okay, so we would take our real estate tax and half of our water bill. By adding half your water, we're trying to help you out to increase the credit a little bit.
We don't have water either.
Oh, you don't? Oh, you run your own with
We
the,
have a well.
oh, okay, okay. I gotta remember where I am.
Yeah. We don't have a Georgetown.
But it does cost us.
Okay,
It
it
does
does cost,
Well,
yeah.
I mean,
It's electricity.
Yeah.
It costs us electricity, it costs
Right.
us in cleaning out our septic
Okay.
on an annual or semi-annual basis.
Mhm. Unfortunately, there's no provision
Sure.
for the septic issue, but unfortunately, but maybe we could look into that. But back to the calculation, we're gonna look at 10% of your total income. And I like to think of 10% of someone's income as a break-even point. The credit is in place if your real estate tax becomes more than 10% of your income. If your real estate tax isn't quite up to 10% of your income yet, then the credit is not really working for you yet, okay? So we could use an example, maybe my total income is $40,000 for the year, 10% we know is $4,000. Once my real estate tax goes over $4,000, that's when the credit is gonna begin to work for me in whatever amount that might be, up to $1,100 for 2018. We could use, I just picked that number out of the sky, we could use 50,000. If my total income's 50,000, we know 10% is 5,000. My real estate tax would have to go over 10%, or in this example, $5,000, right? So that's really the crux of the whole thing. It really comes down to 10% of your income. And once your real estate tax exceeds 10% of your income, that's when the credit's gonna help you out. In whatever amount that might be, up to $1,100 is the credit for 2018, okay? Renters can qualify as well, so people paying rent. In past years, it seems like it used to be harder for the renter to qualify, but now that the rents are getting very expensive for people, people that rent seem to be a little bit more eligible than they have been in the past. The income measure is the same. We're gonna look at 10% of their income, and we're gonna compare that to 25% of the rent that they pay. If 25% of someone's rent is greater than 10% of their income, up to $1,100, that would be the credit that they're eligible for. The only stipulation there is that if there's any type of subsidy with the rental, any federal or state or like Section 8 or anything to that effect, then they wouldn't be eligible for the credit because it's felt that they're already kind of getting a reduced rent and a benefit that way. So, you know, tax people, we have a form for everything, at least one form, and we do have a form for circuit breaker. So we have a schedule called Schedule CB. If you come in from the back of the book, I think if we go to maybe like page 3 in the back of the book, tax book, you'll come across Schedule CB. I won't bore you with each line item on the schedule, but just to bring to your attention that this is where you're gonna do the calculation. This is where you plug in your numbers to determine how much of a credit, how much of a credit you would be eligible, your particular credit. So here's where we're gonna be asking you to add back your Social Security, record your real estate tax, take 10% of your income, compare the two amounts. And whatever credit, whatever the bottom line for septic credit, if you get it, you're gonna carry that over to the regular tax return that you filed for years. So Massachusetts, we have the Form 1. It's the state equivalent of the 1040 on the federal. With any tax credit, if you're eligible for the credit, we always take the credit and apply it towards our tax liability that we would have based on our income. Most tax credits, if you're able to wipe out your tax liability altogether, once you bring your tax liability to zero, that's as good as it gets. Circuit breaker goes a step further, that if you have excess credit remaining, you're gonna get that amount refunded from the state. We'll send you a refund check, we'll put the money in your bank account, whatever you'd like to do. Sometimes we come to a talk like this and people say like, well, this really doesn't apply to me because I don't have a need to file a state tax return. They're living on Social Security, which the state doesn't tax, or perhaps they have a public pension, they're a retired school teacher from in town or a retired police officer. Those public contributory pensions are not taxed by the state. So sometimes people don't have a need to file, they don't have a state tax liability, but that doesn't mean that they're not eligible for the credit. So I always tell them, don't discount yourself, don't count yourself out. If you're still eligible, if the numbers work, whatever the amount of credit you could get refunded, again, up to $1,100 for 2018. So it's pretty straightforward, it's not complicated. Again, I would keep in mind the free tax assistance you have here, and it's awesome that they still have appointments available. What questions might you have about the credit? Yes?
I'm just thinking, I have never heard of this before.
Yes.
So could I do all 4 this year?
You could, okay. So the question we had was, just learning about the credit today, didn't realize that I could be eligible for the prior few years as well. If you were 65 in the prior, by December 31st in the prior couple of years, if the numbers work for you, you are still eligible to claim the credit. You'd have to, initially you'd file the tax return. The only way to get the refund of the credit is to file the return. If you had filed the return, but you overlooked, or you weren't aware of the credit, you didn't take advantage of that, you can amend or make a correction to the return that you filed for the prior year. You would have to get a hold of the tax return for the prior year in the schedule, because so just like the numbers change a little bit over the years, the forms change a little bit as well. So you'd have to get the specific form for 2015, 16, and 17. And if you're eligible again for 2015, make sure you take care of that by April 15th coming up, since that's the cutoff, the deadline.
What you file is this, the amended form is the CB form, or no, the amended is your Form 1.
Okay, yes. So what you would do, so the question is, how can I amend my prior year return? You could probably get a fresh copy of the tax form for that year, and you can get that from our website, www.mass.gov/DOR.
Form 1.
Form 1, yes, Form 1. Form 1 and the Schedule CB combined. Yeah, so what you would do is fill out the return. It seems kind of funny, but you would fill out the return again, but this time correctly. At the top of the form, you'd write amended or corrected, and then you'd have the schedule for that particular year attached to the return. So you could file again for 2015, 16, 17, and you just file an amended or corrected return with the schedule and to get the credit.
You
Yes.
Just do the schedule.
No, you can't really. You're not supposed to just. I suppose I don't think we would return it to you, but technically we want you to file the return again with the schedule. But I know it seems like why not? Why can't I just file the schedule, right?
I'll take a copy of last year's and
Okay.
attach it. Can I do that?
We would look for the specific year. So if you're able to like pursue 16 or 15, that we would look for the form for that.
Right, I mean, I have them. I have the
Oh, okay.
copies that were returned to me. Can I use one of those?
Yes, you can.
Okay,
Yes,
so I don't have to redo it.
correct. Right.
Okay.
Yeah.
So you just make a copy of what you filed for 2015 or 16?
Right.
And that would be your Form 1?
Yeah, and you could maybe provide like a little cover note on the, I'm submitting, I'm amending my return, I had overlooked the circuit breaker.
Okay.
Please refund my $650 or maybe my $1,000,
Okay, so
which would be nice.
And that refund, it's not indicated on Form 1, it's just a little note that you put in there. So you don't have to change anything on your Form 1 that you filed, say, 2015, you just copy it.
What I would do is I would maybe make a copy of what I had filed before.
Yeah,
On my amended return, on the line for circuit breaker tax credit,
correct.
that's when I'd enter the amount.
Enter that in on Form 1.
Yeah, right. And I would include the Schedule CB for that year that shows the calculation and how you got it.
So then I'd have to change the bottom line.
Yeah, you could alter it a little bit.
Okay, so
Yeah,
I could change it right on that.
that would be fine, sure.
The other question I have is, I called up about this and I said, well, what do you determine as income? And they said, well, look on your Form 1,
Mhm.
line 10,
Mm-hmm.
and that is the amount. So, for instance, if line 10 on Form 1
Mm-hmm.
was below 88,000
Right,
for 2018,
right.
then you qualify.
Well, no. So unfortunately, on the Form 1, line 10 is income that's taxed by Massachusetts.
Correct.
But you'll notice that on the Form 1, there's no place to include, in lines 1 through 10, there's no place to put Social Security. Or again, a public pension. So when you, unfortunately, I think you got the wrong answer. You wouldn't take, it's not based on line 10 of the Form 1. Because when you look at the schedule, CB, we start off with what do you have on line 10 from the Form 1, and then please add back your Social Security, or add back other items that weren't taxable by the state when you filed on Form 1.
So add back in your Social Security and your, like if you get a state pension.
Correct.
And a state pension.
Yes, exactly. Or city or town, local, state,
Okay.
yeah.
So you add those back in. And how about if you get a VA disability?
Yes.
That
So
gets back,
it
added
is,
back
yeah,
into?
yeah, yeah. So everything, really, we're looking at your gross income, and the idea again is to help folks that are over 65, that when their real estate tax becomes more than 10% of their total income, that's been the determination. So yeah, everything is added back in.
And how about a dividend?
Dividend as well, yes. Capital gains, dividends. We don't tax the interest on treasury bills or notes, but that's included as well, so,
And how about a distribution,
yes,
even though that's still,
yeah, yeah.
because it's really not income, it's already done in your IRA.
Yeah, so, but if you take a distribution during the year, then we look at it like as money that you kind of put in your pocket,
Okay.
right? So it's kind of really a simplified example, but I like to think of during the year, anything that I put in as income in this side, and anything that I took out for real estate tax on the other side.
Okay.
That's really kind of what it comes down to, right? But the nice thing about the circuit breaker is we're not looking at assets, where sometimes on a local level, if folks apply like a town hall with the assessor, they will ask you what you have for assets. So not only were they asked what kind of a distribution you got from a 401k, locally through the city or town, they would say, how much money do you have in the 401k account? Same thing with like the savings. We're interested in the interest that's earned, that's the income on the money, but we're not asking you for circuit breaker what the amount of you that you do have in that savings account. We're not asking about that, or the value of your stock or anything to that effect. But that's a good question, and it's very common, it comes up a lot. The income calculation is always a little bit iffy, again, because the things, basically the items that the state doesn't tax, and we're asking you to add those back in. So we want a true picture of your income, what you really got, you're really having a difficult time with the real estate tax. What other questions might you have?
If you're married and you and your wife are both over 65.
Yes.
The social security for both years, is that income?
Yes, sir. Yeah. So all the Social Security, all the income is included. You mentioned if you file jointly, only one spouse needs to be 65 by December 31st. But basically, we're asking for all of the income to be included, yes. We talked to someone this morning that kind of came close. They were really like at a break-even point. Based on 10% of their income, their real estate tax was almost the same amount. But the woman told me that she just recently turned 65 in 2018. So I said, well, maybe going forward. So, your income's probably going to stay the same, generally. But now if your real estate tax increases over the next few years, now that you're aware of it, maybe you'll be able to get it for 2019, or for 2020, going forward. So she was happy that she kind of learned more about it today. So although it didn't work for her for 2018, I think in the next few years it will help her out.
I think it's a pretty high threshold to make, huh? If you got two people living on Social Security, and, you look at your taxes that you're paying, it's pretty high.
It is. I agree. I'm working full-time, my wife works part-time, and just to share like my own story, I still have a mortgage, and so it's kind of almost like indirect because my mortgage, my monthly payment, the bank sends the money to the town for my real estate tax, so I don't really think about it that often. I know my real estate tax has gone up recently. We have new schools, we have a new fire station, we have, which has got to be done. But, it wasn't until I got the statement at the end of January from the bank that I saw how much real estate tax I paid. I said, wow, it's it's significant. Everyone feels that everyone's feeling it.
Yeah, when you add in a mortgage and all that other stuff and all the other expenses you got,
Mhm.
including mortgage on top of that, you're not deducting that. So, in a sense, that's kind of a high mark to make.
Yeah.
I know that in other states, they provide a more lucrative,
You can reduce
Right.
your,
credit,
yeah, you could reduce your income maybe a little bit to help increase the credit. Yeah.
Well, the nice thing though too is that it certainly offers people that are sort of in the middle some more flexibility. The guidelines, the eligibility criteria for programs such as supplemental nutrition assistance or fuel assistance are so low that often we're not able to capture some of those folks. But at least with this credit, it does give some people that are in between an opportunity. And we've seen our preparers actually go back over the last couple of years and sometimes have really netted a nice refund for folks that they haven't realized was available. So I use the income guidelines too for our tax incentive program. So I'm tying our tax incentive program to a real number. So if we tie it, and that way again, it leaves some opportunity for people that would not qualify for other programs. And again, and not having the assets test is nice too. So it's been very helpful here in town.
You look at the tax year 2018, when you have to, the max you can deduct is $10,000, and your real estate taxes exceed that already. Then
Yeah. So that's the federal tax reform with the cap of $10,000 for your real estate tax and state withholding. But yeah, I agree. So they increased the standard deduction, but took away the personal exemption. Yeah. Yeah, it's never pleasant. Other questions? All right, I want to thank you for your attention. Thanks for coming out. I hope it is helpful. I hope you are able to benefit.
I think one of our income tax preparers is going to be in to see you after she
Okay.
finishes. She said she just finished.
Okay, excellent. Oh yeah, we'll be here. And if people want to talk to me one-on-one, I'm happy to do that too. I'm not going to dash
Thank you
off.
so much for taking the time. And
Thank you.
Oh,
Mary
you're
Ann,
welcome.
for organizing this.
That's terrific.
Information on how,
The website.
To contact us?
Yes.
Okay, yeah. So if people have questions, they can call us at 1-800-392-6089. Also on our website, www.mass.gov/DOR. There's further information about the circuit breaker credit. In the search field on the website, you could just type in circuit breaker. We have a little video that basically talks about the same thing that I just went through. So I think that people would find that helpful at home.
Charlie, would it be helpful just for you to take one back to the cable TV studio? Do you want to, so you've got the phone number?
Oh,
Take a little picture of the contact information
Do
maybe.
you want that, Charlie?
yeah.
I had asked him
I'll give it to her.
Well, those are.
Okay.
You want this, Charlie?
Thank you very much.